Dear viewers, welcome to this episode of People Who Matter. This is an episode where I interview heads of institutions, people in the policy making positions, and people whose decision can change the course of the institutions which they are heading. Today I'm going to interview Mr. Sudarshan Lodha, CEO of Strata, which is in the forefront of fractional commercial real estate investments in India. Listen to this interview very carefully. He has come to you with the update on the industry. He has answered many of the questions that could be there in your mind. There are many of you who are our clients who have immense interest in this particular sector. The questions that could be there in your mind has been answered in this video. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
I spoke to Mr. Sudarshan Lodha, CEO of Strata. Strata is an asset management company which is revolutionizing the fractional commercial real estate in India. Strata holds literally 50% of India's market share. The company, which was started just about 3.5 years, has forayed into different geographies of India, which includes Bangalore, Pune, Jaipur, and various other locations. Mr. Sudarshan Lodha spoke about many things which is happening in industry, how his firm is growing, what is the size of the industry. There are many questions that are there in the minds of existing investors, prospective investors. All these questions that were asked to me through the comment section or direct messaging to me, I collated all this and asked Mr. Sudarshan Lodha. Stay till the end of the video. Let's listen to his answers on this subject. Welcome to this podcast, Mr. Sudarshan Lodha. You came on our channel last time and the audience appreciated your thoughts, and there has been a widespread demand and inquiry coming for the fractional commercial real estate. People never knew that there is an asset class like this. They were looking for somebody who will execute to the perfection on the ground. And that opportunity has been given by your firm, Strata, and we were instrumental in joining hands with you. And we created very happy customers, and we gave them lots of properties over the last 1 year. So I just thought I'll bring you on my channel again, let the audience see who the persons are behind this and what's happening in the industry. So welcome to this podcast, Sudarshan.
Thank you so much, sir. Always exciting to have conversations with you.
First of all, what happened in the industry the last 1 year?
So let me speak first from Strata standpoint. We've had our best year possible from an investor acceptance ratio standpoint. So that is a big point to us. Then second, SEBI came back with a consultation paper and said, hey, we're looking at regulating you guys. And in November came and accepted, saying that we have approved the regulations and the final regulations are going to come around the corner. While we're still waiting for it, but I'm hoping it should come anytime soon. So these two things have happened. But what I would say is that whole post the SEBI news, the awareness has increased, number one. Second, very unique, different types of properties, which, it was always an aspiration for us to own, have also started coming because people stopped looking at us just like, just another technology platform doing, and have started looking at us as an institutional player at the same time. So the kind of institutional supply which we are also attracting is phenomenal. And, we want to continue riding the momentum to what it is as such.
How big is the industry now? It's almost a year since we spoke to you and we took up this initiative. We brought your fractional commercial real estate under financial planning process. It's just not just investing. So we thought, why not we create a cash flow for people who are retiring, people who are looking for a second income? How do we put this in a financial planning space? And the idea has been well accepted. But I just want to know the industry trend. How big is this industry? And how do you expect this to grow over next 1, 2, or 5 years?
Sir, so we today are almost about a little over $200 million in terms of our AUM. Or a little over about 1,700 crores in terms of our AUM right now. So what is the entire industry size? It's probably about 3,500 crores where we have a 50% kind of a market share as of today. While it's good and bad, in my view, because no 2 or 3 players can build an industry. It requires multiple players to come together and build. So we definitely hope there is more players. It brings in more competition. keeps you on your toes to improve and keep bettering your investor experience, improve your technology processes and make it better, and bunch of other things around it. But that's where the industry is today. But like I said, I would say the last 4 years, ever since we started, I think a great foundation has been laid right now for the industry. And regulation was just that turbo boost which was required for this foundation to now take off and big building as such. So that's how we look at in the next 2 to 5 years. I think this will be a $2 billion to a $3 billion kind of a AUM market, which today is at about $500 million on an average, is the overall size of this industry.
So it's very much a sunrise industry, and it takes time for it to build. And you have that first mover advantage or capturing the good market share. You have set benchmarks for others to catch up or improve further upon from here onwards. I know this is going to be a premature question that I'm asking you. When the regulations come, see, you are also somebody who has given advice or, suggestions how the regulations have to be structured. What is that the regulation is going to solve the problem? At what stage we are? What is the thinking of regulator? What form it may take shape? Or when the regulations come, what changes might come? Say, for example, safety of capital. Yep. How the resale has to happen, ticket size, all these things. Do you have any idea at this point of time? My audience would like to know what shape it is likely to take up.
To start with, my any indicative answer is basis what I'm reading with the consultation paper or the board minutes which are available on the SEBI's website. So for people to just go and download and read it themselves. However, there are several changes which SEBI is going to bring about. First is reducing the ticket size, bringing it down to 10 lakhs. Which is a great move because it opens a larger thing. Earlier, we always wanted to do 10 lakhs. We had limitations because a company cannot have more than 200 shareholders, and hence we always had to do a 25 or a 35 lakh kind of a opportunity because that was the intent. The intent was also that, hey, can we reduce it to 10 lakhs? But I had my number of shareholders limit, which goes away once SEBI comes in and I can have as many number of shareholders as such. Second is, in general, now all the assets which we had, investors units were unlisted. It was with, with a custodian, etc. But now SEBI has told everything has to be dematted, and all your holdings which you have currently has to be transitioned and has to become into a listed unit per se. So investors will get a swap of the unit of their securities, what they own, to a unit on the stock exchange, which they can trade as well, which again ensures price discovery for secondaries becoming easier and is market maker and not Strata not deciding the price, which we anyway were not doing. But then SEBI's point is that why are you even involved per se? Another thing which SEBI has brought in is we have to put in our own contribution as well, which earlier I believe none of the platforms were doing. While we acknowledge this point, I think it's great. And I put restrictions that we can't sell for 20 years of any of these investments also at the same time. So which means our skin in the game is going to be significantly high for every deal which we'll be doing going forward. So that's another great move in terms of investor protection. And obviously because SEBI is there's a whole grievance redressal mechanism and bunch of other things which are there. Right? So that is the other piece which is there. But what I am very excited, which I'm hopeful, which is probably not there right now, but it's my reading, is the taxation which is there right now. I'm assuming that the rental return taxation will be the same. However, on exit, the capital gains is going to get better because when it was unlisted, it was 20% for Indians. And, it was, and once it gets listed, it will become 10% for it. So that 10% delta of capital gains on long term, I believe is a huge saving what an investor would be making as a post-tax return for himself as such.
So today it is attracting those investors who can take a little bit of a risk because it is an unregulated. Once it gets regulated, things will become easier, resale becomes easier, ticket sizes will drop down, the tax efficiency is derived. The asset class itself will become more and more attractive to the investor community. We only hope and wish that the regulation sees the light of the day as quickly as possible, and all of us will be very happy doing that. So our responsibility to our customers will also come down.
I would like to add one more point. So like, for instance, what probably made the regulator to think about this? So as the industry was growing, today, like I said, it's about $400-500 million kind of an industry right now. The issue for a regulator when the industries become very large is if you don't regulate, there's always a chance for it to have pitfalls. So I think this is the new India we're talking about in general, where we are not reactive, we are proactive. Earlier, otherwise, you will always hear regulations or laws coming once a big scandal happens or a big issue happens. Let's take the Vodafone tax matter as an example, 11,000 crore tax matter, which Government of India lost and then brought in the new norms. So from that standpoint, I'm very happy that we are in a very progressive economy right now. And hence, every other point you told gets covered.
Sudarshan, we have been working closely with you throughout 2023. What I observed was during the entire 2023, barring one asset from Jaipur, which you a warehouse asset, but all the assets that you brought in was in the form of corporate offices.
Yeah.
Will this change in 2024, or what are the other assets that you are looking at to bring to the people, the interested persons to subscribe for? Are you expanding your asset types?
So obviously, first, last year we could bring only one warehouse and rest were all office spaces because I think over the years we've educated a lot of people on warehousing. So warehousing assets have become very obsolete, or the kind of cap rates at which we would like to buy, have gone thin, which is generally because we've invested at such higher cap rates or other things before. We would not want to go lower cap rates until we see some evolution in the industry, and then we'll want to go. So hence we've been conservative from that end. Office spaces are supposed to see great opportunity in general. We see this whole people coming back to office. TCS made a recent news. Everyone has to compulsory come back to office. Multiple other companies are also doing. So we have been seeing those trends, especially the amount of GCCs, which is global capacity centers or innovation centers, moving to India and setting up shops in India. And earlier, erstwhile, which was probably IT, BFSI, etc., a lot of manufacturing companies have been opening offices in India. And if you see our entire last year, almost about 160, 180 crore acquisition was in a manufacturing hub where we bought in an office space, and all our tenants were manufacturing clients as such, right? So we look at in a very different lens and do our acquisitions. It's not just about how good opportunity or a good return take it. There's a whole lot of other things which goes behind the acquisition of a property or deciding which markets to be in as well, with a 5 to 7 year kind of, because that's the minimum time frame we see we'll invest average every deal. And hence that is one criteria we look at and not go by trends. Like for instance, many of our investors came back and said, hey, why don't you invest in Ayodhya? It's a great thing, right? That's how a retail investor might think. I need to look at a 5 year or a 10 year mindset. While I'm sure there is promise, but there's a whole lot of other infrastructure developments which needs to go through. Budgets have to be passed, bunch of things for me to take a call. Now, one is take a risky call and say, okay, let's take a call. And if money we lose, we lose. If we don't get the return. Unfortunately, I don't have those kind of number of investors who want to take such bold calls, and that even if we lose money, doesn't matter, but let's take an early call. Whereas most of our investors are being conservative, that it's okay, let's go a little late, but let the party begin, let things settle down, and then we'll come. We'll probably not be the last in the party, but we'll probably don't want to be the first in the party too, right? So that is the other mindset with which we play. Again, because our investors are our feedback givers on what are they thinking, and they are our source of information, because they give us insights about the companies they work at, the industries they work at, how are they thinking, how are they going about, what is their industry thinking, what are the changes the industry is having, which has impacts on real estate or economy, etc. And we know all this becomes when we don't do an asset, this is what we do. We grab information from investors, from partners like y'all, to understand trends, how things are going across. With these trends, in the last 2 years, we've been doing a lot of study through a lot of doctors on our platform. He's like, hey, Sudarshan, you guys should look at healthcare real estate as a large opportunity, especially whether it's hospital, senior care, or senior living in general is a very large opportunity. Why are you guys not looking at it? So we've spent close to about 12 to 18 months going deeper, understanding each and every segment about how a hospital operates, what are the cash flows, when does it become break even, who are the operators, who's good, who's bad, who's doing clean business, who has better corporate governance, bunch of other parameters which is important to do so, because a hospital is an asset class where the tenant never leaves. So hence it's important that you are married to somebody who's also as clean, loyal, has a greater vision and an approach to business as well, right? So that is a focus area for us this year. We will be going deeper in healthcare, and we will be bringing healthcare assets under the portfolio, because India is super underpenetrated in terms of quality healthcare. and how insurance sector has penetrated. If you see on a CAGR standpoint, it has been growing exponentially. We feel that quality healthcare will no longer be a luxury, but will become a necessity. So that is a segment which might be a new sector which we will be focusing on this.
One another observation that I made, and in fact, almost all clients made, was why are you bringing all the assets in Pune? Why don't you have a geographical spread? I know that you have done assets elsewhere, but ever since we joined hands with you, we saw that barring the Jaipur asset, every asset was coming from Pune. Most of these assets were revolving around Hijewadi, Pune, and now that you have the Pune ATC project which is coming up, investors are telling me that we want to diversify over geographies. When will you bring properties beyond Pune? Why you are concentrating everything in Pune?
Hear your feedback as such. See, we like to invest where we know we're going to make our money no matter what. Pune is one hell of a growth market. You have really, you have to be in the city to know how the city is going to a transformational change. The only thing the city does not have is an airport, because they use the defense airport per se. But that city is the fastest growing city in the country right now. The kind of opportunities, the kind of urbanization that city has seen is unprecedented also at the same time. And it's not just IT which is growing the city, but in hardcore manufacturing, which is growing that city. Like Hyundai recently set up its factory after Chennai, the second factory. After 30 years, they moved and decided to set up another factory and not expand in Chennai. They decided to diversify and move to Pune. So for us is, if you're getting good opportunities in a particular market, keep going all in, right? While we understand from certain investor standpoint that they can't diversify because they've already invested in Pune, we completely understand. But then there are several other set of investors who probably not invested in Pune. And an opportunity like this is very important. Like Tesla recently took an office in Pune, 30,000 square feet in an office market, right? So, and BNY Mellon, which is a very large American company, again, recently took 1.4 million square feet office space built to suit with prestige in Pune and stuff, right? So there is a lot of opportunity which exists. It's all about tapping into the opportunity, but at the same time, that doesn't mean other markets are bad. It's just that we probably didn't find as lucrative opportunities what we've been finding in Pune. But we do hear our investors, that's our job. We would be looking at doing more Bangalore, more Jaipur, more Mumbai, and we're going to soon expand in Ahmedabad as well. There are very large set of Gujarati investors who, few of them have even invited me to Ahmedabad, which I got the opportunity to go with them. They showed us the entire opportunity around, got us introduced to a lot of people with whom we can transact and do business. So, what you saw last year, I think there might be a lot of diversification this year, where I hope the complaint would come is, Chandrakant sir, where should I invest? I don't know which market is good, which market is not. So, but that is a problem for you to deal with.
Well, I want to ask you this particular question. This is a question the audience and your customers who are asking this question. So we are in an unregulated industry, and people are channelizing their hard-earned savings into this kind of an investment. I know the answer for this, but I want you to hear from you for the benefit of the audience. When somebody invests this money, what happens? How does it go into the books of accounts? How does the rentals come? What is the control on the movement of the funds infused by the investors to buy an asset? How does it go to the end user? And when they exit, how does the money move? They are under the opinion that Strata can control, and Strata has controls over this money, and there is a possibility that funds are not properly utilized. Can you explain for the benefit of our viewers what are the checks and balances out there? How safe the monies are? I want to hear from your own words.
So the money is safe till it's with us. Once it goes to the developer, then we don't know. But anyway, jokes apart. But the entire process which we run is via an escrow account, which is with ICICI Bank. Maybe for a handful of your investors, we can do a separate session generally on compliance at Strata in general, where we can showcase that, hey, this is the money you transferred. It was in escrow. How long was it in escrow? When did it get moved into the SPV account? From there, how did it go to the end? I think the entire money trail lies with them. Many investors have even thought that till you keep the money in escrow, I think you're making FD returns out of that. Unfortunately, RBI does not allow that. So we can't make or even generate returns for you, even if you want to, till the property is not acquired as such, right? So that is what is the entire process which we follow. Obviously, as a company, we've grown, we've learned, and we've become wiser day by day. It's not that you've been an expert on everything you do on day one, but we've just kept learning and kept improvising. I think that is the art of the day as a growing company, to keep learning and keep improvising your processes, which we've been doing very, very seriously on a daily basis, on how we can make the processes much better, more stronger, have more accountability for the entire process within the entire ecosystem itself, whether it's employees of Strata who are in the finance department or legal department, but also in the entire banking ecosystem with whom we work. And, all the paper trails are always available for us to share it to investors, for them to track at any point of time that, hey, this is how the money was moved around.
Is it safe for me to say that at no point of time the customer's money can be touched by Strata? So it is ring fenced, goes through an escrow account. If it is not utilized, then the monies have to go back to the investor. Is it a fair understanding of the process that you mentioned?
Yes, absolutely. We can't touch the money because any money from you becomes a deposit for me. Deposits are barred. You can't take deposits in a big way. Government is very, very strict because of the whole Sahara scam and multiple other things which have happened. So, and there are very strict penalties if you do so as well. So we can't touch that money because it's not our money. Strata is not investing themselves. We are a facilitator, facilitating the entire acquisition. And then as asset managers, we manage the properties for the investor. So hence from that parameter, this is at any point of time, we don't touch the money. The only money in our view which is in touch with us is effectively the rents which have to be distributed, while there's a third party company which does, but we authorize that. It's more like a review maker checker system which happens every month, because we have domestic, we have NRIs, we have OCIs, there are different TDS rates. We don't want a situation where, due to clerical errors, some things can go up and down. A TDS for an NRI should be more, it's lesser. For a domestic, it should be lesser, it's higher, etc. So those are those things. There is a maker checker where we verify those things before the third party makes the payment. So that is probably the only remote control we have as such. But everything else with respect to your investment is completely controlled. Now, even on exit, which is a very valid point, and we've recently exited one of our opportunities in Jaipur. We exited in 2 years. The entire money again went into an escrow account. Once the money hit the entire escrow account is when every individual investors were told to sign a share transfer form for them to exit the investment. And once they signed, the money got transferred to them. The rents we held back for the last 1 month because we wanted all of them to sign and then pay one consolidated amount to all. And that is what we paid as a one last rental to everybody, instead of, because it's a hassle for us also, right? Because we have so many investors, transfer this, because there are two separate escrow accounts, one for the rental, one for the selling account as such. So hence, we just ensure that the selling amount is larger, that needs to go on real-time basis. But the rentals, let's just do it in probably, in bulks. Or in scenarios through which it becomes easier, but we just gave one payment to everybody at the end of the transaction. But again, even in the whole selling process, we learned because the buyer took almost 3.5 months to acquire the property for a 23 crore trade. My investors gave consent almost 3 to 4 months back, and they said, let's exit the property. And then they were waiting for 4 months, hoping money's coming. So, we also learned that, while sellers may be whoever, buyers may be whoever, let's see the color of the money and the proof of funds first on the table. Let them park into an escrow, or take the approval from the investors and then track. Or let him finish his legal due diligence, all the other processes, and then we go take our investor approval. Because, when an investor decides to sell, he wants the money within a week or two. He's not going to wait for 6 months for the money to hit his account, right? So, because he's made his mind of exiting, so then he'll become impatient as well. So we've also learned that. So any future acquisitions, we're going to follow a similar process to ensure that it becomes more seamless experience for the investors.
It's a process of evolution. One will learn with the time, and there are teachers for you everywhere, and you apply the correctives as times pass by. I want one answer around the trustees. Last time when I interacted with you, you said that you have trustees in the system. Now, can you tell me what does the trustees do? What is their role and how they are protecting the interest of investors? I need a slightly detailed answer around.
Yeah, of course. So trustees are regulatorily appointed agencies whose job is to act as custodians as such. And there are fixed protocols given to them of instructions on how certain systems and processes have to be followed. And in a similar case, so all the escrow accounts, they are the trustees. While we have to authorize the payments and say, please move, they verify each and every aspect of that payment and then review it, and only then they process. So it becomes more like they're the maker, they're the checker in the system of sorts for all the transactions, and that is the role of the trustee. What is going to be more exciting is a trustee also acts as a custodian, like I mentioned, keeps all our property documents also with them. Handy at the same time. So all the original documents of our properties are with trustees. Like in our case, it's with this agency called Universal Trusteeship. It's an ICICI portfolio company. And they maintain all the property documents in a vault, etc. So at any point, if an investor wants to come and review, hey, I'm happy to be in Bangalore, I would like to see the property documents. While I have the scanned copy on my dashboard, I want to verify originally. We've had people who wanted to do that. It takes anywhere between a 3 to 4 day prior heads up, because those documents are in a vault, which is in a warehouse. So the documents have to come back from the vault, to the office. As such, the vault is outside the city. So it takes 1 to 2 days. So whenever the documents come, then they review everything, you can do. So that is the whole role of the whole trustee. But things are going to be more different. Once SEBI comes in, the whole role of trusteeship will be more clearly defined. Because it was unregulated, we were defining these roles. But SEBI will come and define each and every role for these trustees, right from fund accounting to fund management to fund compliance, fund distribution. Everything is going to be led by these trustees and agencies who are empaneled with SEBI. So that is the way it is going to be. So for us, we're very happy because a lot of our headache goes off, which gone to third parties, and like GAMS for that matter, which is a very large company who does, the entire distribution and fund accounting for most of the funds in the country. So we are also hoping that it goes into much better professional hands who are not taking us because we were not regulated and were rejecting us. We hope that with time, this might become a great, which will give us more bandwidth to focus on better acquisitions. Assets. So that is the role of the trustee, but it's an evolving role. Post-regulation is where the real role of the trustee would come in very quickly.
One of the observations I made, and some of the customers also made, it is that these days you are taking up larger assets. One of the example has been your Pune ATC project. Earlier, when you announced the project was sold off in no matter of time, because this is a larger assets. Maybe also because you did a lot of assets in Pune and people were, it's one another Pune. Let me wait for some other territory to come up and then I'll put in the money. That could be the reason. It could be because of the larger size of the asset itself. So if there is a delay, or let's ask you a hypothetical question. You do a project and because of the size of the project, whatever could be the reason, it does not get subscribed. What happens to the token amount of money which is paid by the investors in such a case? What is the remedial measures that you have in mind?
So rightly said, Pune is definite saturation, which is what we are seeing and the feedback we're getting from a lot of our, colleagues in the industry as well. But having said that, in the event if a transaction doesn't go through, then the token which is there, we couldn't subscribe. We pay interest from our pocket, and we pay you an interest equivalent to the FD amount, and we pass back that money back to the investors. So at that point of time, while we've spent money on diligence, on structuring of the transaction, all that effort, whatever valuation services, etc. But that's a cost which, we have to incur for it, and that's a loss which we will be booking in our system, and additionally pay you interest to the investor. So the idea is that if you're deploying money with us, we don't want your money to be idle. It has to keep generating money because you hired us for doing that, and we have to do this. So if we couldn't subscribe a property, effectively we failed, and hence we are liable to pay you the interest for your opportunity lost. If not for anything, it's a way of us showing our token of gratitude for trusting on us. Maybe we were wrong about an opportunity because it was not probably well received, and we learned from that and we'll keep doing. But then investors' money never idle, no matter what.
I will summarize my understanding here that in case an asset cannot be fully subscribed for whatever the reason, then the investors, whoever have given the token amount of money, will be refunded. And as things stand today, you have an intention to pay them back with the FD interest rate. That's the word of assurance the CEO of Strata is giving here.
Yep.
Mr. Sudarshan, any investment opportunity will have its set of risks. I want to know from you, what is the specific risk a customer gets exposed when he invests into fractional commercial real estate?
So let me talk about risks today versus risks post-regulation as well. So risk today is because it's unregulated. You don't know where the regulations are going. You have probably no clarity around, hey, how will the regulation be positive or will it be negative? At any point, I'm sure SEBI's interest is always to secure the money of the investor. So one thing is for sure that the capital is always intact, but how is the taxation going to be? Is it going to be tax favorable, non-favorable? So these are certain uncertainties which exist today from a risk standpoint. But otherwise, as common risk, whether it's pre-regulated, post-regulated, is, see, end of the day, you're investing in real estate and it is subject to the market at the end of the day. Like, for instance, if I invested in Outer Ring Road in Bangalore, as an example, Outer Ring Road suddenly outgrew and all the office spaces came to Outer Ring Road. Whereas, let's say I invested also at the same time at Mysore side, hoping Mysore will also have a similar growth, right? So there's always a possibility that I might not make that kind of return in Mysore vis-a-vis what I had probably made in Outer Ring Road, right? So that is one risk which exists, which is a market risk, whether you like it or not. Second is liquidity risk. You're investing in real estate. It's not fixed deposit or a gold, so you can't expect exit tomorrow morning. It takes its own sweet time for it to compound and continue generating returns for you as well. It doesn't happen overnight. It's not a double making scheme in 1 year, 2 years. It doesn't happen that way. You should be like super fortunate that, okay, we bought something and then the metro property got announced right outside our property, because of which, property prices went up or whatever, which is an anomaly. It happens once in 1,000 properties or once in 200, 300 properties, right? So those are those other criteria which are critical to look at as such. So there is a long-term play only. It's not a short-term play. So investors with a short-term mindset might never be able to meet their expectation returns, or in general, we tell them, please don't invest, because it might not commercially make sense for the liquidity risk and for the returns you are going after, because this is more for a bond stubborn kind of an investor who likes to invest in bonds. It's, as stubborn to be invested for a 10-year, 15-year, 20-year thing, because the real compounding starts post that. Let's take one of our properties. We have with Puma, we have a 5-year lock-in and a 15-year lease. The same amount of money we've invested, Puma has invested equal amount of money in interiors. So many investors are like, hey, when should we exit? I'm like, I don't think so. They're going to leave for 15 years. We recoup our money in 9 years in the form of rentals. After that, the next 6 years, we'll recoup almost 70-80% additional money for ourselves, which means almost 2 times in 15 years. And if for any reasons, and let's hope God, they do continue for another 5-10 years, I said, you've recouped 3 times your money in rentals. Why do you want to exit? Just enjoy, because it's free money at the end of the day. And obviously you own the real estate and the value is not depreciating no matter what, because the real business is compounding, right? And that's what is exciting to us more than anything else. So it's long-term play. So investors with the short-term investment mindset, definitely it's a too risky asset class and they should avoid for them as such. But we've also done, differentiation between our products, because we've realized many investors don't like to invest, let's say, in a build-to-suit kind of a transaction. So we bifurcated under a normal pre-lease building versus a growth opportunity. Growth comes with its own risks and delays as well. But we've learned again from our past experiences, and in short, we involve bankers, we involve third-party professionals on board upfront to ensure there's enough tracking, mitigation, other things happening so that it becomes as secure as a pre-lease investment. But risk is a risk, right? Whatever can happen at the end of the day. So these are predominantly the other risks. But one risk which is no longer risk is, the demographic risk, which is, will India grow or not, or will Bangalore grow or not? I don't think so. Any city in the country today is facing that risk, because we are on the cusp of one of the best bull runs this country has seen in the next decade. So in my view, will Strata be an outperformer? I would say yes and no. Yes, because the market is also an outperformer. No, because will we beat the best person in the market, or will the market do better or not? I don't have any clarity as such. But the market is such that even an average fund manager will give you substantial returns no matter. So you don't need to choose the right guy, but you just need to choose the industry because that's the industry you're investing in, betting your money as such, right? So, yeah.
Sudarshan, you have been in existence for last 3.5 years. I think both NRI Money Clinic and Strata started almost simultaneously. Have any of the risks played out during this 3.5 years, whatever you said? Any experience from the playing out of risks?
Yes, and it's also about mitigation at the end of the day. Like for instance, there was one of our properties which we had invested. We sensed that the tenant is having a financial issue. We should look at finding another tenant immediately. We just had a hunch for whatever reasons with our interactions with the tenant. We started looking for a tenant immediately. The day the tenant said, I'm bankrupt and I'm about to shunt, we had another tenant within 15 days. So our investor didn't have any disruption. Thanks to asset management team to keep tracking this on a regular basis. And that's something which we do very proactively, as asset managers, to be proactive about certain things. Like for instance, we know in one of our properties, which is an SEC asset, we've invested in Hyderabad. The tenant invested just before the sunset clause for the SEC benefits, which was fading away. By March 2020, he leased the building in February 2020. The SEC benefits go on for 12 to 15 years. So the question is that will the tenant leave? Because why did he take an SEC property if he didn't want to take the benefit? Which means your tenant is going to stick around for 12 to 15 years. But as managers, to keep monitoring risk, we have to keep tracking government policies as well. Is there anything which is going to adversely impact for them to quit the building? And say, hey, it's no longer viable to do all these compliances with SEC and bunch of things, right? So it's a very dynamic environment, unfortunately, which we're living in. And hence it's very important that we keep upping our game on a regular basis and keep checking multiple parameters on what can happen, what can progressively impact the tenant, start scouting for a new tenant immediately, or a location. Like for certain locations, we had a think, once the metro comes, we'll take a call. And we had a 2-year mindset. Metro work got delayed by a year. It's become 3rd year now. So we're saying, okay, now it's probably a right time to consider the exit. So the risks are multifold, certain in your hand, certain not in your hand. But you should always keep progressively looking forward to keep evolving your investments for your investors and keep advising them.
See, when we talk about real estate, it doesn't require any advertisement. Everybody is super excited to put money into the real estate. When you give an opportunity, there is always a crowd which is ready to invest into the property. What is the message that you have for the prospective investors? Do this, don't do this. The 2-3 points that you ask every investor to check before they write a check for fractional commercial real estate under Strata.
So first things first, have a 5-year to 10-year investment mindset. If you don't have that kind of mindset, or you don't need this money for the next 5-10 years, only then deploy your money. If you need this money within 5 years, please don't invest with them, because you're not doing justice to your investment. Because like I said, the real compounding starts, post 7-8 years only. As such, and you live through the risky period, and if you're exiting, you're probably not even enjoying the compounding, right? So don't give other investors the opportunity. Either you have that kind of vision and mindset and the appetite to hold, otherwise don't do it. So that is very, very important. Second, in general, is also about your risk appetite. As such, from an investor, if you already have a lot of real estate exposure, then look at smaller exposures until you don't dilute your existing portfolio by selling or liquidating your existing portfolio. Then you come in. Like if you own 5 houses, look at selling one of your house and then start taking more. You can start with 1 or 2, but sell your house and then start putting more. Don't go all in into one. That's very important. Third is also about diversification. You like certain property, tenant, you know about the tenant. Let's say your friend works in that company. He's told, hey, we're not moving out for 10 years. Don't worry, go all in. I would say double down your investment, but never go all in, because there might be another property where another friend would say, no, we're not going to go out for 25 years, and you might not have liquidity at that point of time, right? So it's important that you diversify your portfolio. And especially in today's dynamic environment, where you never know, today a Fortune 1000 company can go bankrupt also tomorrow. As such, and how competition is evolving in general, that it's better you diversify your portfolio. One other thing which is important is that please don't treat this as fixed deposit investment. Your tenants will come, tenants will go. property is still there, it's still yours, but don't treat this that, hey, whenever I want liquidity, I can get out. I should always get monthly rentals. While that is how it is going to be, but obviously it's real estate at the end of the day. Tenants, even a company like Jet Airways can go bankrupt. Nobody had anticipated at that point of time. But your real estate is intact. Jet Airways property got leased out within 2 months itself to XYZ tenant. So, just about being a little patient about this entire thing and not be more impulsive in decision making, or you should not be very reactory in general from what you hear in the market. Suddenly, IT jobs are getting affected, can be a news which can come as such, or TCS made a statement back in 2021, if I'm not wrong, that, hey, we've decided to do permanent work from home, etc. You need to sometimes read between the lines why a TCS kind of a company or a large IT company does this is to ensure they can go back to the landlords and renegotiate the rents. They didn't let go office space at all because for a company like TCS, rent cost is still 1% to 1.5% of their overall cost balance sheet. People is still their largest cost. If they have to do first is they let go people rather than letting go office space as such, right? So that is the way it is. So don't follow the media and the trends. Certain times the news is being fed for certain purposes, and you should not get carried away with that. Please do your own diligence before you do. But also at the same time, also do your own due diligence about it before you invest. Talk to your friends, talk to advisors, let's say like you, who can tell them that, hey, probably is this a right investment for you or not? This is the financial planning process which you were talking about. I think it's very critical that people focus on doing that as well, and then they decide, okay, this is the kind of allocation I would like to make into something like this also at the same time, right? So bunch of things. I think it's a dynamic answer. It is subjective to person and age of that person. Also at the same time based on their risk appetite, and hence you may not have a right or a wrong answer for this.
One final question for you. Any company gets its respect, value, and more customer confidence by being transparent in whatever it does. Please tell me what measures Strata has taken to be transparent with its customers. How do you keep customers informed? Obviously, you will share the good news. If there were to be a news which is of concern, if there is a delay in rentals, if there is a delay in subscription, how do you keep informing your customers in a very transparent way so that they will remain your loyal customers?
So again, we learn from feedback as a company. It's not that we had figured out everything when we started the business or when we do. I think it's more feedback. Oh, this is also something which we should have looked upon, which we did. So we try to be as transparent. But again, please understand that as an asset manager, investors pay us an asset management fee to solve for problems and not come with them for every small thing that, hey, you know what, glass broke in your property, it costed 5,000, I'm here to take approval. Certain times I'm like, okay, just take a call. At 5,000, we'll inform them in a half yearly report that, hey, we spent 5,000 rupees to get this. Like in one of our properties, and it can happen. The short circuit happened, cause of which the entire HVAC is gone for a toss. We repaired it by getting agencies on board. It had an issue to the tenant for 2 days. He couldn't access the property, but we solved it and got things done, right? So as an asset manager, these smaller issues, that's what you hired here for. Investor would not like. That's our reading, and this is the kind of feedback we've got. While contrary, we're like, hey, tell us about all the small things as well. But then we have to follow what majority wants us to do. That, hey, don't come with smaller issues. It's fine. But having said that, let's say rental delays, we put level 1, level 2, level 3 in terms of our own systems that, okay, if the 10th is the date, we'll wait till 15th because there are certain times for any reason there can be delays, cash flows, process changes, CFO change, XYZ management, new protocols, whatever it is for that matter. So that is one way to do it. Level 2 is, okay, if it is become 25th and the rent has not come, then what happens? The level 3 is on the end of the month if the rent has not come. So certain times we trigger it at level 1, certain times we trigger it at level 2 if it is a first time phenomena, or certain times we trigger it at level 3 when we are aware, because the tenant has pre-informed that, hey, there will be a delay this month for XYZ reasons. And then they still delay. Then we come into the level 3. So we've channelized our things to keep our investor communication seamless, but also at the same time, we don't want them to get bombarded with so many things, because we've had investors who invested in about 15, 20 properties also. They're like, first I get irritated when I get 20 credits every month Like, it's a good thing that you're getting 20 rents every month, but like, it's annoying because my message keeps beeping 20 times as well, and I have 20 credits in my bank statement, right? So now I can't solve for that problem, but at least the point is that we try to see, because that same investor came back and, hey, don't give me monthly rent, you reinvest that money somehow and give me a lump sum money at the year end. It's easier for me to track, to, do my accounting and other things. But unfortunately, we can't do that. We can't hold the money. We don't have the rights to do so. It's your capital. It's your company. We are just asset managers. So I have to distribute on a monthly basis. We have restrictions as per RBI to reinvest that money as well, because any investment always has to go from the source account. It cannot be done through some wallet accounts. Government has banned all those aspects as well. So, so all these things are criteria where we can keep few investors happy. We can't keep few investors happy, but we have to look at what is the larger feedback people are giving. I have to continue following those processes in the interest of everybody.
Thank you, Sudarshan, for all those inputs. When these words come from the chair of a CEO, that adds value, that adds confidence. All that I can say is we wish you all the best in the year 2024. We wish you continue to grow. We wish you continue to help investors, giving this asset for them to invest and reap benefits in this India growth story. Thank you very much for your time. I remain in gratitude to you for your kindness to come here and spare your time. Thank you very much.
Thank you again. I think we're part of a nation building process in itself. So all thanks to you and to a lot of investors to trust what we're doing and be a contributor to the nation building process we are to. Thank you very much.
Dear viewers, hope the interaction I have done with Mr. Sudarshan Lodha could have answered many of the questions that could be there in your mind. If it did give you an answer and if it cleared the doubts which were existing in your mind, please do not forget to give me a thumbs up. If you are a person who is watching my channel for the first time, or if you are yet to subscribe or the channel, do not forget to hit that subscribe button now. Press that button now, press the bell icon so that whenever I release a video, you will be notified. Thank you very much for sparing your time to watch this video on NRI Money Clinic. I shall be back with you next Tuesday with yet another expert, with yet another topic. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.